According to supply managers in the 9 Mid-America states, how is the economy performing?
Our survey of manufacturing supply managers in the 9 Mid-America states for February was very strong, up to 69.6 from January 67.3. Now, this is the highest that we recorded since October of last year, and it's the second highest we recorded since April of 2004. So the manufacturing economy, according to the supply managers, is growing briskly. Now, I have to say the trend is very strong. However, we're still not back to pre-COVID levels. We've probably got another 3 to 4% growth needed before we get back to pre-COVID levels, but we will get there, assuming the successful rollout of the vaccine. Now, what's also constraining us right now is 8 out of 10 supply managers indicated they had supply bottlenecks. In other words, inability or slowdown of products, inputs getting to the manufacturing company. So that's one of the factors slowing growth right now, or it would be even stronger. Now here I bring up the chart showing in blue there the Creighton, in blue the Creighton number over the last 18 months, and you see there it's up to 69.6. And the US number in red, it will be coming out later on this morning. I expect it to be up as well. This manufacturing across the US is growing at a pretty strong clip, and it's just spilling over to the broader economy, but we still got some more room that we need to grow to get back to pre-COVID levels.
What were the hiring trends?
Hiring was strong as well for February. The number was 65.6. And of course, these indices range between 0 and 100. 50 is growth neutral, so that's a strong reading for February. That's up from January's 57.2. Compared to, but still regional employment still about 4.5% down from pre-COVID levels, actually 4.8% from pre-COVID levels, and also down about 4.7% or so, about the same year over year. So this economy still got some room. We need to add back some jobs, as the chair of the Federal Reserve said last week. We still got more jobs to add, but we are adding them.
What is causing supply bottlenecks?
The bottlenecks were quite significant. We're seeing those. 33% reported transportation issues, that's shipping problems. And that's all the way from the port in Los Angeles and New Orleans to here to Omaha and across the region. Supply, shipping issues, trucking issues, train issues, and so that's slowing. 23% reported cutbacks in suppliers, cutbacks and shutdowns. In other words, having to switch suppliers. 19% reported there was problem with single source providers, and of course you got a single source, they can't keep up. And 18% of those actually reported supplier was busy, and of course that's expected right now with this expanding economy. And 7%, only 7% reported volatility in their own company output. So that's what we're seeing, the causes of the bottlenecks, but that is an issue right now, along with inability to find and hire qualified workers.
What inflation trends are you noticing?
Inflation, I'll call it wow. Inflation gauge is up to 95.2, and that's up from January's too high, 91.1. We're seeing inflation breaking out all over, particularly in steel, particularly in anything to do with agriculture. We're talking about building products, 10% year over year. So we're going to see that spill over into the CPI, the Consumer Price Index, in my judgment, in Q2 of this year. And we're seeing that affect the inflation indicators at the national level. And of course, we've got the Biden stimulus package, which will push the inflation rate even higher. So that's one of the issues. Business confidence did drop for the month down to 50 from 53.6 in January, but still pretty good confidence out there, even though it is down to 50. But the bottlenecks and the inflation are two issues, and also inability to find those workers that are needed.
What impact is trade having?
Trade was very strong, and we've seen that particularly with Asia. Exports were 70.5, up from 62.5 in January. The global economy is expanding. We got a cheap dollar, making U.S. goods more competitively priced abroad. We've got imports even growing. It was 58.3, and that's up from January 52.3. Of course, that's just because the regional economy is expanding, needing more and more imports, and that's a good signal. So all in all, the trade picture was very good for the month of February.
What are indicators to watch?
Always keep an eye on that 10-year treasury, at least during these last few months. That yield has been up by 0.6%, 60 basis points over the last several months. What that's showing is inflationary pressures. You need to see that one daily. It's moving up daily, indicating higher and higher inflation. First time claims for unemployment insurance came out last week. The last week number was good, looking like fewer and fewer employees are entering the queue for our unemployment insurance. Look for the employment report that comes out this Friday. I don't expect that to be as good as we'd like to see, but still going to be positive. Consumer price index coming out March 10th, going to show not blow away inflation like we recorded in our survey, but we're going to see inflationary pressures building, and maybe the Fed's going to have to eat some of their words. And stock prices. Stocks, we're seeing some weakness there. And why is that? Because of the increasing interest rates long term, meaning investors can find gains somewhere else. And that, for example, gold, not as much. Bitcoin, watch Bitcoin is moving up. So investors looking for alternatives to stocks.
What is the economic outlook?
We're going to continue to see the Federal Reserve with their pedal to the metal. They're going to underpin debt and equity markets. Municipal bonds still underpin that. I think that's a mistake. For me, let the market run, let the big dog run. That's this economy. They need to actually begin raising rates, in my judgment, in the second half of 2021. We're going to see a slowdown in this first quarter right now when those numbers come out. The lockdowns in California and New York, two big economies, along with what went on in Texas, pulling back growth, GDP growth for this first quarter. Short-term interest rates will remain low until this last quarter of 2021. That's my outlook. I think they will begin rising then. We're going to see an economic rebound in the second half of 2021. The Biden stimulus package, $1.9 trillion, but much of that, not all of that's in 2021. That's going to really kick this economy along with the rollout of the vaccine. That's the most important factor. And as I said, the outlook is for inflation in the second half of 2021 to pick up quite significantly, and it's going to test the reserve of the Federal Open Market Committee, those individuals that set interest rates. But all in all, it was a very good report. Inflation up, risk are rising because of that inflation outlook, and we're going to see the Biden package passed. But we'll have to wait and see what our March report brings to us on the first business day of April. Until then, may your economic cup runneth over.